Inflation is an expansion of the money supply, which includes credit. So as we get more money and more credit into the economy, that's inflation. And we have massive, not only monetary growth, but credit growth. And that's what's fueling the debasement of the US dollar, which is why prices go up. And, prices, I think, are just going to head ballistic from here. Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year. But it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher next year in gold.
The global financial system is standing on the edge of a historic shift. Inflation is no longer a temporary policy challenge. It's a structural consequence of unchecked credit expansion and government spending. As the Federal Reserve cuts rates in a rising inflationary environment, the value of the dollar continues to erode. Global investors, led by central banks, are selling treasuries and redirecting that capital into gold. This powerful rotation is setting the stage for the next leg of the precious metals supercycle, one that could see gold reach $5,000 to $6,000 and silver breach $100 within the coming years. The world is quietly abandoning the dollar standard and returning to real money. PeterSchiff, economist and founder of Euro-Pacific Asset Management, warns that the endgame has already begun. China's ongoing gold accumulation and plans to strengthen its currency with metal-backed credibility are reshaping the global monetary order. Meanwhile, Wall Street giants like Morgan Stanley now recommend up to 20% portfolio exposure to gold, a stunning reversal after decades of neglect. The 60-40 portfolio era is fading as investors move toward hard assets that can survive the coming storm of money printing and dollar debasement. Gold's subsequent rise won't just be a price rally, it will be a repricing of truth in a world built on credit illusion. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Gold is the one monetary asset that all these central banks can rely on. It is the system that dominated pre-Bretton Woods, and even in the initial years of Bretton Woods, up until 1971, even though the world was using the dollar was redeemable in gold. So the world was still backing its currency with gold, even though they did it through the US dollar. But now I think, just like we went off the gold standard in 1971, the world is going off the dollar standard, and it is going back on a gold standard. And now what's also significant is Wall Street has finally woken up to this reality. And now you're seeing major Wall Street banks that have never recommended gold now saying that their clients need to have exposure to gold, whether it's 10%, 20%. It's now something that, mainstream investors are finally going to start to participate in. And, prices, I think, are just going to head ballistic from here. Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year. But it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher next year in gold. Most people have done better in gold than in the stock market over 10 years, 25 years. And they're certainly doing a lot better in gold this year by a long shot. They keep talking about the record highs in the stock market. This is one of the worst years ever for the U.S. stock market if you price it in gold. So gold investors are doing a lot better. But my point is that now, finally, people are not getting laughed at for recommending gold. Right now you have, okay, yes, maybe we should have gold in a portfolio. Yes, right? They should have had it in their portfolio 25 years ago, right? But the fact that they're now starting to include it, not only does that, basically validate what I've been saying all along, but it means that the demand for gold is about to go through the roof because central banks are going to keep buying. They have a lot more gold to buy than they've already bought. But now they're going to be competing with private investors, both institutional and retail, in this market. And, I have this gold company called Schiff Gold, and sales for the last 3 years have been very lackluster. I mean, it's not like gold has been going way up. It's doubled, more than doubled in the last 2 years. Yet business has been slow because people were afraid that gold's topped out. I don't want to buy the highs. So a lot of the normal buyers have been on hold. Now everybody is starting to realize that the sky's the limit on gold, that there is no top because there's no floor to the dollar. That's really what's happening. The dollar is going to be losing a lot of value as we open up the spigots. The Fed is cutting interest rates into rising inflation. Not only is inflation well above the 2% target, but it's headed in the opposite direction. It's going up. Yet the Fed is cutting rates anyway. I think by next year, they'll be back at QE because they're going to try to keep long-term interest rates from rising, which is what they're going to do. We're going to see a backup in interest rates as the world sells treasuries to buy gold. In fact, you mentioned, Morgan Stanley said the 60-40 portfolio should be 60-20-20, where you cut the bond allocation in half. So if all these Morgan Stanley clients sell half their bonds, which would be a lot of U.S. treasuries to buy gold, not only does that push gold up, but that pushes treasury bonds down and pushes yields higher. And the Fed doesn't want higher yields. Trump doesn't want them. So the only way to bring them down is massive quantitative easing, which is just going to drive even more demand for gold because all that is more inflation and more reasons to get rid of your dollars. Yeah, well, first of all, we've made it clear that China is our enemy, right? And so China recognizes that, despite the fact that they're our biggest supplier of goods and one of our biggest lenders, right? So talk about biting the hand that feeds you. We have owed a lot to China, and we've basically framed them as our enemy. And so why would our enemy want to hold its reserves in U.S. dollars and U.S. treasuries where they're extremely vulnerable? So I think China is completely divesting. It's on that path of replacing its dollar reserves with gold reserves so it can truly have an independent monetary system. I think eventually they're going to depeg the Hong Kong dollar from the U.S. dollar and maybe peg it to an RMB that I think ultimately will be backed by gold. I think the Chinese are headed for a Chinese currency that is backed by and maybe even convertible into gold, just the way the U.S. dollar was at once upon a time. I think that is the direction that they're going. And China is the world's biggest gold producer, so they have a lot of gold in China that they're producing. They just don't export any of it because the Chinese government buys it as fast as they could dig it out of the ground. Well, people are recognizing the path that we're on. I mean, the idea that the Fed is going to maintain 2% inflation is now a complete fiction. Nobody believes that anymore. I don't even think the Fed believes it. And I don't even know that they have a target anymore. In fact, the only reason they had a 2% target was because we were below 2% for a while. And so they invented that target as an excuse to create inflation. But now that we're well above 2% and they still want to create inflation, there is no target. But people are appreciating that fact, and they're starting to get out of dollars and into other assets, whether it's gold, stocks, or crypto. I mean, I think the people that are choosing Bitcoin are making a mistake, but they're choosing it for that reason. They think they're getting out of the dollar into something better. And the CPI, right? When you're looking about inflation, the CPI is a very flawed measure of the effects of inflation. And that is by design. It's not a coincidence that the government designed a methodology for tracking inflation that understates how much inflation there is. Because the government creates inflation on purpose. Inflation is a tool that the government uses because it solves a lot of their problems. Of course, it creates problems for the people, but governments love inflation. But since the people don't, government wants to create inflation, but not let anybody know how bad it is. And so, that's why they shouldn't be the ones that track consumer prices, but they do. So the CPI doesn't really capture what's going on. So if you look at the CPI and, prices are going up 3%, that's not even close to reality. You have to at least double it, if not more, to get a more realistic assessment of how much prices are going up. But what really is inflation is not prices rising. That's an effect of inflation. Inflation is an expansion of the money supply, which includes credit. So as we get more money and more credit into the economy, that's inflation. And we have massive, not only monetary growth, but credit growth. And that's what's fueling the debasement of the US dollar, which is why prices go up. And it's why people now want to get out. They want to get out of their US dollars and into something that will retain its value.
The illusion of Federal Reserve independence is finally unraveling. What was once portrayed as a firewall between politics and monetary policy has now been exposed as a coordinated mechanism between the Fed and the U.S. Treasury. This revelation carries significant implications for global creditors who once trusted the dollar's stability. When political expediency replaces sound policy, inflation becomes the chosen path of debt repayment, not through honesty, but through devaluation. As fiscal discipline collapses, the pressure to inflate away obligations only grows, eroding confidence in U.S. assets and accelerating global de-dollarization. Behind the political theater, the consequences are already unfolding. Rising deficits, expanding tariffs, and interventionist economic policies are transforming America's financial identity from free market capitalism toward centralized control. Risk assets like Bitcoin remain tethered to speculative cycles, while tangible stores of value such as gold continue to anchor global capital. Structural reform is no longer a choice. It's a necessity born of fiscal exhaustion. Let's get back to the interview.
I've always believed that Fed independence was, a pretense, that behind the scenes, the Fed and the U.S. Treasury, worked hand in glove, but they didn't want that perception to be there. They wanted our creditors to believe that there was independence and that there would not be political pressure on the Fed to just create inflation and, debase the dollar. Because if you're a creditor of the United States, you want to know that the value of the dollar, is going to be maintained and not sacrificed for political expediency. But I think what the Trump administration is revealing is that pretense is a pretense, that there is no legitimate Fed independence, that the Fed is very much political, and that is the problem, because you destroy that pretense, and now why hold dollars? Because obviously a country that has as much debt as we do, there's a lot of political pressure to create inflation, to repudiate that debt rather than to honestly repay it. And so why would you want to be a creditor if it's obvious that you're not going to get paid? That yes, you might get your dollars back, but by the time you get them, they won't buy very much. So why not get rid of them now? And so this is the danger that we're facing. We're accelerating the realization that this is just a pretense and that the Fed is an arm of the U.S. Treasury, which it's not supposed to be. It's supposed to be completely independent. And, the reason that it's independent and it's a private, it's not a government agency, it's private. The reason was because the Constitution didn't even authorize the federal government to issue paper money, so it couldn't do it. So it created a private enterprise, the Federal Reserve banks, that could do what it constitutionally had no authority to do. But I mean, today, the judges or the justices of the Supreme Court are unlikely to, enforce the monetary restraints that are imposed by the Constitution, but they very well may uphold Trump's ability to fire Lisa Cook by claiming that the whole concept of an independent Fed itself is unconstitutional, and really let the world know who controls the printing press. The Trump economy, is not that much different than the Biden economy. I mean, the biggest thing is the massive government spending and the massive deficits. And so not only is that the same, but it's actually worse. Yes, we've added on tariffs, but I don't like tariffs. I mean, I'm a free trader, and tariffs are taxes. We need more taxes, unfortunately, because we have huge deficits. But the tariffs, the way they're being operated, are just going to make American industry even less competitive and it's going to result in the manufacturing sector, what's left of it, shrinking even more. But what I particularly don't like about the tariffs, too, not only the unconstitutional way that they've been imposed, because they really need to be imposed by Congress and they need to originate in the House because they are taxes, and that's how taxes are supposed to be raised in the United States, not enacted by a president, but passed through Congress. But I don't like all the exemptions that are being thrown about and how Trump uses the tariffs as a weapon to try to get companies to give concessions or to do things that they might otherwise not do, but for the extortion of, well, if you do this, we'll exempt you from tariffs. And I also don't like the fact that, some companies can bribe their way out of the tariffs, larger companies, whereas smaller companies are stuck, paying the tariffs. So I don't like this kind of central government planning, this micromanagement of the economy. Trump was very critical of Kamala for the socialist policies that she advocated, yet he's pursuing a socialist economic agenda of his own. So I don't like anything that Trump is doing when it comes to the economy, right? There's some stuff that he's done that I can support, but it's not economic. The economic policy is horrible, and the precedent that it's setting is even worse because Trump's not going to be president forever. And it's most likely that the president who's going to follow Trump is going to be the most left-wing, radical socialist Democrat that we've ever put into the White House. And the reason that I'm convinced that it's not going to be a Republican is going to be because the economy is going to be so much worse in 2028 than it was in 2024 that no one's going to vote for 4 more years. It's going to be another election about change where the incumbent party gets blamed for the mess. And now you have somebody else coming saying, I'm going to clean it up. And so it's not going to be another Republican because the Republican brand is going to be completely tarnished, just like it was after Bush, right? And then we got 8 years of Obama. And the reason that Trump was able to beat Hillary Clinton was because the economy was bad under Obama. And so the voters wanted to change. And then the reason that Trump didn't get reelected, it was because the economy was worse at the end of his first term than it was at the beginning. And so the voters took a shot on Biden. And then the economy got worse under Biden. So they went back to Trump. And now it's going to get worse under Trump because the fundamentals are not being changed, right? Both parties are pursuing the same failed Keynesian economic policies. I think there's a lot of downside risk in Bitcoin. I mean, I think Bitcoin is much more highly correlated with the NASDAQ. And yeah, tech stocks, the NASDAQ made a new record high yesterday as well. Risk assets have been in favor, and there's been a big appetite for risk. But we can easily have a correction or a bear market in risk assets, and that would include Bitcoin. And I think if investors get more risk adverse, they're more likely to want to buy more gold, not less. So if we have an overall decline in the stock market, the gold bull market can continue, but the Bitcoin rally can't, because Bitcoin is going to follow other risk assets, because at the end of the day, that's what it is. It's not a safe haven store of value the way gold would be. It is a highly speculative asset that people buy because they think other people will pay more for it. And that's, the same dynamic that drives a lot of momentum stocks. I mean, they get, devoid of the fundamentals. People aren't buying momentum stocks because they have a good dividend yield or because they have a low PE. They want to just jump on a moving train, and they're afraid to not be on it because everybody else is in on it, and they want to get these paper gains. And so that's the same thing that's happening with Bitcoin. But there's a big risk that dynamic can reverse. And I think the biggest risk for Bitcoin is all the money that has piled into Bitcoin ETFs that came out of gold ETFs, that came out of gold stocks. A lot of those investors may well try to switch back. They may try to say, you know what, I sold my gold stocks and I bought Bitcoin ETFs. I would have been better off if I just stayed in my gold stocks. Maybe I'll go back to them. I think I got rid of them too soon, and there could be a lot of selling, And then you have a lot of these, Bitcoin treasury companies that have also been the big buyers of Bitcoin. I think that whole trade is going to blow up. And a lot of these Bitcoin treasury companies are going to go out of business. And when they have a going out of business sale, what are they going to sell? Well, they only have one thing to sell, their Bitcoin. So, there's going to be a lot of Bitcoin for sale. I don't think the U.S. government's going to step up and buy it. I think that's all a bunch of hype about the strategic Bitcoin reserve. So, there's a lot of downside risk in Bitcoin. I don't see a lot of downside risk in gold at all. I see a lot of upside potential, though. Practically, the one thing that I could do as president would be to refuse to sign any budget that was not balanced and refuse to sign off on any increase in the debt ceiling. Then, if I could get 1/3 of the House or the Senate to support me, meaning my veto could not be overridden, Congress would have no choice but to eliminate at least a third, maybe 40% of the federal government, because they would have to reduce spending in line with tax revenue. And so that would cause a massive, collapse in government, which is what we need. We need to shrink government dramatically because big government is the problem. Now, of course, we also need higher interest rates, which we're going to get. And I think that if we couldn't borrow more money, then we couldn't pay the interest on the debt, because the only way we could pay interest on the debt is to borrow that. And so that would force a restructuring of our debt, which I think we need. I mean, I know that there's no way we can repay the debt. The current plan is to inflate it away. I think that is the worst way out. I think an honest restructuring is better for everybody, including our creditors, than massive inflation. It's just politically embarrassing to admit that we're broke and that we can't pay our bills. But I'd rather admit the truth than perpetuate a lie. And I'd rather, get the country on a sound economic foundation rather than continuing to perpetuate, this bubble that we have. So there's stuff that I could do. And then I would try to get rid of as many regulations as I possibly can. I mean, a lot more than we're getting from Trump. I mean, rather than, Trump wants to try to price control, like with drugs. He's trying to force companies to lower their prices. I don't want to do that. But what I would like to do is eliminate a lot of the regulations that have caused drug companies to have to charge so much for their drugs in the first place. That's what Trump could do, is remove a lot of the regulatory barriers that the federal government has enacted that make it so expensive to develop new drugs. Get rid of those, and then costs will come down naturally. The government won't have to coerce companies into lowering prices. The free market will cause them to lower prices.
The coming years are shaping up to be a true reckoning for the global financial order. The illusion of stability around the US dollar is vanishing as record debt, political interference, and policy manipulation converge. Markets are beginning to realize that inflation is not an accident. It's a policy. When a nation chooses to monetize its debt rather than confront it, the path forward becomes clear. Devaluation, loss of confidence, and ultimately, a flight to hard assets. Gold and silver are not just rising, they're reasserting themselves as the anchors of real value in a system built on political promises. The tide is turning. As the Fed abandons even the pretense of independence, and as foreign creditors quietly exit the dollar, a new monetary era is taking shape, one defined by transparency through scarcity. Those who understand this shift early will protect not only their wealth, but their purchasing power in the years to come. This transition won't be gradual, it will accelerate when trust breaks. Prepare wisely. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.